That's essentially why I'm buying this stock. This is my valuation. Obviously, the fundamentals aren't that bad. It's not the best. Corsair Gaming valuation, upsides and downsides, potential gains. As you saw in the preview, I have an Excel file which I use to value stocks and see if the valuation makes sense after my fundamental research. You can just jump into this timestamp if you want to see the results only, but I believe you need to know how I get there in order for you to make the best conclusion from those numbers. So make sure to watch the entire video. There are a few metrics that we have to know in order to get an outcome from this valuation method. First is the current market cap. The second is past the 4 to 5 years revenue numbers. And the third one is the historical profit margins for this company and this industry in general. And at last, we need the historical P ratio for this company or this industry in general. So now, I've already found these numbers for Corsair stock. First, Corsair's market cap as of right now is $2.43 billion, as you can see on the screen. Second, past 4 to 5 years revenue numbers. You can see the historical revenue numbers here from 2016 to 2020. Third, a range of profit margins for this company or this industry in general. As you know, or you probably know, Corsair wasn't profitable until the year 2020. So there aren't enough historical data for the P ratio because they weren't profitable. As you can see on the screen here, they only became profitable on 2020. So I can use the historical data on this stock for profit margins. Therefore, I'm going to dig out the profit margins for its competitor Logitech. These are the historical profit margins for Logitech every quarter since 2009. I know Logitech competes directly maybe on only less than 50% of Corsair's revenue, but it will work. Fourth, historical P ratio for this company or this industry in general. Here is Logitech's historical P ratio. I wanted to show you the numbers for Corsair, but again, since they recently became profitable, there aren't just enough data available. That's why unprofitable companies are really hard to value, because there aren't just enough data available for stock analysts to figure out what the valuation should be. There aren't just enough data available for them. That's why these companies mostly tend to be more volatile in the market. It's really hard to value these companies. In this case, I know that Wall Street puts Logitech and Corsair in the same category, and I know that their P ratio have almost the same trend, so I'm comfortably using Logitech's historical data. So now we have everything that we needed, so let's jump right into the Excel file and the valuation. Okay, so now, first we have to enter Corsair's market cap. So as we figured out, the market cap for Corsair is $2.43 billion. So apply it to all. So now we have to enter the revenue for 2017, 2018, 2019, 2020, and 2021. Now we're in 2021. The year is about to finish, so I'm gonna just enter the expected number for the year 2021. You can find the expected number in Yahoo Finance. So now, profit margins. There are 4 scenarios here: low, mid, high, and high. Lower means worst case scenario and high means the best case scenario. So the worst case scenario for this industry, if the company is profitable, is around 10%. The mid-low is around 14%. The mid-high is around 20%. And the best case scenario for this industry, in my opinion, is 35%. And let's just apply it to all. So it's time for the P ratio. Again, we have 4 scenarios: low, mid-high, and high. Again, I have to reference Logitech's P ratio because Corsair only became profitable last year. Here are the Logitech's numbers for the P ratio, as I showed you before. The P ratio ranges between 14 to 40, 42, something like that. So that's what I'm going to use here. And let's apply it to all again. Okay, now normally when I want to calculate the upcoming revenue numbers, I use the forecast method. As you can see here, it forecasts the revenue numbers based on the historical data. So I'm going to use the lower confidence bound to see the upsides and downsides. Okay, so now the lower confidence bound. So the lower bound is here. These are filled from that forecast method. So I didn't enter these revenue numbers 2022, 2023, 2024, and 2025. So again, with the profit margins that we explained and PE, trailing P ratios that we explained, these are the market caps that we can see potentially in the future. These are the returns that we can potentially have on the stock price. Let's just don't look at the best case scenario because let's be honest, profit margins 35%, P ratio 40, P ratio, yeah, and this is just super speculative, but I just wanted to have it here. Same as the worst case scenario, because as you can see here, P ratio of 12 or the profit margins of 10%, it is not ideal. So that's why I have the bad case and good case scenario here, because these are more rational here. So now let's start with the bad case scenario. The P ratio for the bad case scenario is 15, which is lower than what it actually is right now for Corsair Gaming, and the profit margins for this scenario is 14%. Yeah, 14%. They're gonna do better than that in long term, I'm sure of that. But let's say if these are the numbers that we have in the future, I believe by the year 2025 we can have 130% return on our positions, which means double in 4 years, more than double in 4 years. It's not a bad return. That's why some people believe that this is like is easy money. But yeah, this is the bad case scenario. But let's see the good case scenario. For the good case scenario, the P ratio is going to be 21, which it actually is right now. The P ratio for this stock is right now 21, and profit margins is going to be 20. I believe I'm being a bit hard on the good case scenario. For example, the P ratio could be 25 or the profit margins could be higher than 20%, but I don't want to speculate too much. So yeah, these are the numbers that I have here. So I believe by the year 2025, I'm going to be between 130% and 360% up on my position on Corsair stock. That's essentially why I'm buying this stock. This is my valuation. Obviously, the fundamentals aren't that bad. It's not the best fundamentally company, but in this industry, based on this valuation, I really like what I'm seeing here. So yeah. So if we go to the annualized numbers, it's going to be around, let's say, 30% annualized return on this stock by the year 2025, which is a great number. Let's be honest, it's going to be a great number because our goal is to defeat the S&P 500 returns, and 30% return or even 23% return or even 7% return for the worst case scenario. It's good. If we want to defeat the S&P 500 returns, even 7%, it's almost in the same line as S&P 500. That essentially is why I'm buying this stock. And remember, when we were using the forecast sheet, we used the lower confidence bound. I'm not going to use the forecast numbers or lower confidence bound numbers, as you can see these two lines, because I don't want to be super speculative on this stock. I want to be cautious. If you like, you can comment down below, and I can make another video sharing those numbers. But yeah, I believe those numbers are super speculative on this stock. For some stocks, I use forecast numbers, but yeah, for this one, I prefer using lower confidence bound because we had the year 2020 and the forecast method is using those numbers, and the year 2020 was kind of weird, as you know. So yeah, because I want to kind of diffuse 2020 numbers, I'm using the lower confidence bound. So that's it. But before everything, I want to explain the worst case scenario and the best case scenario. You may say, oh, worst case scenario for this stock is 7% return annualized. You have to consider this. We don't know if they're gonna increase their revenue numbers for the upcoming years. For example, in here you can see the year 2025, the revenue generation is $2.6 billion. By the way, if we annualize the revenue growth for these 4 years, is around 9.57%, which is lower than what this industry is expected to grow until 2027. As you can see here, the gaming industry is expected to grow around 13% annualized from 2020 to 2017. So in here, they're only growing less than 10%, so they're underperforming their industry. So again, I believe I'm going to have around 30% return annualized if I keep this stock for 4 years. Yeah. For the short term, if you look at the revenue numbers, yeah, I get why a lot of people are saying that, yeah, their numbers are shrinking or things like that. Yeah, their numbers are shrinking. And when I was reading the 10K report or 10Q report, it was a bit scary seeing the short term numbers being so bad, especially for the third quarter. It was really bad for the third quarter. But the business is growing, the industry is growing. I believe this stock is going to help me outperform S&P 500 returns for the upcoming years. Hope you got a lot of value from this video, and please like this video because I have a small YouTube channel. So I appreciate it if you hit the thumbs up and subscribe to my new channel if you like the content. If you don't like the content, don't subscribe. If you like the content, subscribe because I'll be posting more videos like this every week. Peace.